Hello guys, welcome back to this channel and happy new year to you all. Last year, this same period last year, I recorded a video talking about advice for the year 2022. Unfortunately, I didn't listen to my own advice as well, as many of us do this. We set out a plan only to then fail at that plan. And because I didn't take my own plan serious, I was hit hard by that. But again, this is the year 2023 where we have to set things right. And hopefully, we can recover all what is lost. Last year hasn't been easy in the crypto world. Neither of the financial markets has seen any ease as well. But this year, I hope it will be a year of bountiful harvest for us all. This is not going to be another advice for 2023. The advice remains the same. We should learn to stick to plans and follow daily risk management. But today, I'm going to make the first video of the year. I haven't made a video in a while due to some recent challenges I've been facing. And because of that, I won't be making much videos again, but whenever I have the chance and opportunity to do so, I'll definitely do so. And so this will be an introductory lesson into an advanced class, which I will call Advanced Support and Resistance. Many of us know support and resistance, as it's been told to us, as area where price meets supports, or area where price finds supports, and area where price finds resistance. So in this case, this will be the area of resistance, and this will be the area of support. But then if we look at this in an advanced nature, is support really an area where price meets support? That doesn't really define support in any sense. But then we know with the rules of market structure, with the rules of supply and demand, that once price is falling or one price is crashing down, that it takes an amount of effort, equal effort. Let me change the color of this. Once price is falling, it is an equal amount. Not helpful. Once price is falling, it takes an amount of equal measure or equal volume or momentum to get the price to what? Likewise, when price is rising, it takes an equal amount or effort or volume to make the rising price to what? So because in a falling price, it takes the same amount or equal amount to make the price halt, and an imbalance to then make the price rally. So this area now become an area of support. So in essence, we say a support area is an area where price meets demand. Likewise, an area of resistance is an area where price meets supply. So in essence, if price is rising up and then like this, and then price meets supply or price gets halted, that means resistance has been created. Likewise, if price is falling down and then it stops, that means an amount of demand has come into the market for this movement down to halt. And then for it to reverse means there is now an imbalance in demand to supply. Supply was coming down, demand started coming in to make sure no further price movement downwards. But that demand coming into the market may not be able to overturn the price movement, but it halts the downward movement of price. So demand is already coming into the market. And in case this happens, like price is coming down, then we see demand coming into the market, bulls are stepping in, then price continues downward. So what just happened? It means the supply was coming, it met demand, which means support was created at this level. And then along the line, over a period of time, from this point to this point, the supply exceeded the demand, and the price could just continue downwards. But if the demand that came into the market over the period of time exceeded the supply coming down, and then it leads to an imbalance, then we will see price rally like it happened on this valley. So in essence, traditionally, this would be an area of resistance. Why this? That will be an area of resistance. Some can use the price close, some can also use the wick. Likewise, this will be an area of price support. That is a system we have been used to, where we have our floor and our ceiling. Price keep hitting the ceiling and then hitting the floor. And then you find support here, find resistance here. But this is only true when price is in sideways, not when the market is trending like this. When price is sideways, floor and ceiling analogy will work. But when the price is trending, then flooring and ceiling analogy may not work, because price will just keep breaking new areas of resistance or new areas of support, depending on the structure of the market at that point. So we have ranges when price is in a range and price creates a support and resistance. Also, when price is in a channel, like this, either a channel down or a channel up, price just creates support, resistance, support, resistance, like that. And in a channel where price is moving down, it creates support, then resistance, support, then resistance, then find another support. So that is how price moves in a channel. Then when price is heavily trending, how do we then identify area of support and resistance based on it meeting demand or it meeting supply? Now, this is it. Look at this movement downward. Or let's say look at this. Let's start from here. We have this price movement where this was another area of resistance, this was another area of support. Price broke through here. Many people will see that resistance has been broken, and then this candle closed right above of the resistance. Many people will go long as at that point. But what then happened? Price met supply. And we know that price met supply because after this green candle, we had almost an equal amount, as in equal volume of candle. This momentum of the candle, this red candle, is almost equal to the momentum of this candle. So this candle, they are basically the same, which some people can call the tweezer top. So it shows that at that very point, price has met resistance, which means price has created resistance, which means price has met supply. Resistance can be created like this. Support can also be created like this. And one thing in the market is, one resistance is created like this, you want to watch for the low of this very resistance candle. If the low gets taken out, then there is high chance that price will go down. But if the low gets respected, and then you just see another green candle breaking up, that means the created resistance has been invalidated. Now a new support has been created. So now look at this. Price was coming down. Then the next candle was a bullish candle. This is a pure valley. which shows that demand was met and then there was an instant imbalance in price. Here to here there should be a gap. There was a gap. And because of the imbalance, the price kept coming back up. So if we come to analyze at this point now, we see that resistance was created at this particular point. Resistance was created there. But then there is a caveat to this. If you look at this particular candle and the next candle, they are not equal size. Yes, not all resistance created will be of equal size of this with this. But then you also see that the candles are not just within this particular candle. This makes this a mother candle and this an inside bar candle. So for this to be an inside bar setup, yes, resistance was created, but then for you to be able to get a trade here, you want to see a close above of this high or a close below of this low. Remember here I said if the low of this resistance creating candle was taken out, but in this case it wasn't an inside bar. We had an higher high to this, but here it's a pure inside bar. The body of the total candle size of this was engulfed by this. So we want to see a breakout from here or here to confirm either we are going to go down or we are going to go up. And look, the low of this gets taken out by this. Then support was created again at this point. Support was first created. But when you see pin bars like this, it's a sign that support is likely to be created. You want big body candles. Like we have this big body candle. Then look at this big body candle. This confirmed that support was created here. But still, you won't be taking this trade until the high of this candle is taken out by a close. And once we had a close here, and the high of this candle closing above that got taken out, it could only go up. Now again, if you look at this, resistance was created. Yes, the low of this candle was taken out, price moved down a bit, created support again. Now tell me, if you look at this green candle and this red candle, and you look then at this red candle and this green candle, which do you think has a more momentum or more chance of pushing price up or pushes price down? This candle definitely is almost doubled the size of this candle, which means there is higher momentum on this candle than this. And if the high of this particular candle gets taken out by a little margin, there is high chances of it going up. But this candle is little compared to this particular candle. So if the low of this candle gets taken out, there may be little chance that the price will go down because there is not enough momentum to show that the resistance being created at this point is able to overturn or able to create an imbalance which will overturn the up rally or up movement of price. Now look at this. This was also an equal body size. We have a green candle which also has an equal body size of a red candle. A resistance was created because supplies was met at this point. And then price came down a little bit, but then what we had was a support creation again. Now, this couldn't push down price a lot because we are in an uptrend. That is why when you are trading, you don't want to trade against the trend. You always want to pay attention to the trend. You don't want to go against the trend because resistance can be created in an uptrend just to trap sellers. Many sellers will have sold at this point on break of this candle. Yes, but I doubt they will have taken profit at this week low. I doubt. With stop loss above, then what happened? Their stop loss gets taken out. After this support formed and the high of this support was taken out, price just went up. Another supply was created at this point. Now looking at this size of this candle engulfing two previous candles, that shows a serious top. If you have watched my top and bottom lessons, then you will understand this candle. It's engulfing two previous candles. So that is an intermediary top. So we have to see a major correction. And then what happens after that correction? We have this momentum line or trend line gets taken out. Before that, the trend line was offering support, which some people will claim this as demand. Price push up a little, created another resistance at this point. The resistance was created at that point there. Resistance was created, then it broke the trend line. Price came down, formed support, now it's coming back up. Now as it's coming back up, what is being formed again? Resistance. Can we now say that price is already in a downtrend? I would like to see the low of these candles get taken out before I conclude that price is now in a downtrend. Because if you argue, we can argue that here we still have a strong demand, but this is not a supply demand lesson. So one thing I've noticed now is the moment supports have been created in a uptrend and the high of that support candle gets taken out, there is high chance of price going up. Now let's go on to the 15 minutes for me to show you another example. This is the daily. It is clear now that that little uptrend, or that little downtrend on the daily is a very big downtrend on the 15 minutes, which is why as day traders we prefer the little time frames to catch quick pips rather than waiting on the daily and waiting like forever. So now what can you notice here? Price was in a downtrend, right? Let's just say price was in a downtrend. Price made support here. The high of this support candle gets taken out. The candle size here is twice this candle size. It gets taken out. We see a small rally. Price comes back again. This creates support, right? On an old support. It created support. The candle gets taken out, but we had no momentum. Reason because price was shifting. Then we saw a break of structure to the downside. Now, support was created here. This candle size is twice this candle size, right? So we can say support has been created after the close of this candle. Notice what I was saying. The high of this candle wasn't clearly taken out. So no trade. If you want to trade support or resistance or counter trend, then you wait for this break of this candle size by a little margin. But where will your target be? You have to remember that this is an old area of support which has broken. Now it's supposed to turn to resistance, going by traditional definition. So if you are taking this trade from this point to this point, is there enough margin or is there enough risk reward for you to risk an amount on this trade? No, it's not worth it. So you just want price to come up as much as it can, in as much as it remains in a bear trend, and then create resistance, which it did here. Couldn't break the high of this candle, created a resistance, but the next candle, the low of this resistance created candle got taken out by this. These two candles shows momentum trying to push up, but then we see rejection. And then when the low of this candle gets taken out by a small margin, like that, price came down. And when price came down, what happened? It shows with these two candles, it shows price was trying to go up, right? But then price met supply, which shows price also created resistance as at that point. Price created resistance. As the resistance was created, the unbreak of this candle's low, we saw price going down. Now support was created again at this particular point. Let me change back to the trend. So we saw that support was created here. Almost equal size body. The high of this support creating candle was taken out by this. Then what happened? We saw a small rally. But remember, we're in a downtrend. It's better to wait and let resistance create, or yes, and let resistance form, than taking a counter trend that may result in losses. Little resistance was tried to be created here, but it's little. Like I said, their support was from right away. That doesn't show that the market is bullish. No. Then what happened? At this point, resistance was created. This shows clear imbalance, supply exceeding demand that was coming to the market. And why? We have a downtrend. So we expect resistance to be created. At the moment the low of this resistance created candle was taken out, we saw two candles downward. And then notice something, the low of this threshold low, continuation low, was taken out, which means after price was rallying at this point, I said when price is rallying, what do we expect? We expect that when price is rallying, that it meets supply for it to create a resistance, and the supply was met at this point. That means after this movement downward took out this low, that means this supply that was met at this point became a valid supply zone. And then when price came back into that supply zone there, it meant another supply. Yes, it meant another supply, and by that it created resistance again. Notice ongoing up, resistance were trying to form, but they are weak. And when you see like a doji, pin bars, don't just take them that resistance has been created. Take them that there are signs that resistance is likely to be created. Then after this big body resistance candle has formed, you want to see the low taken out. In this case, the low wasn't taken out, so no trade. Then price came properly into that demand zone. Into that supply zone that was created after this low has been taken out. This is a high momentum move down, which shows that the supply being met by price rally at this point is strong. Then what happened? Price created resistance. On break of this resistance candle, slow, price went down. Price tried to form support here again. Notice this low again has been taken out. So we have a resistance. We have a supply zone as at this point. Price didn't quite get there. Supply was formed. The year of this candle wasn't sorry. The year of this candle wasn't taken out by the next, but and the third candle or the second, it was taken out. Price created rejections. This is the dojis I'm talking about. They showed rejection, but no big solid candle like this. When this resistance was formed here, the low of the resistance candle wasn't taken out. So if you want to take a trade, no trade. But I wish the low has been taken out, then price could have gone down. Here, the same thing. Here, this is just like signs, rejection signs. These are rejection signs. Then once this big momentum candle was formed, look, when the low was created by a little margin, price went down by a little, came back into it because huge supply was met at this point, leading to a creation of massive resistance all across this point. Then price could only go down. And these are trading along the trend. So as price form resistance, we get a trade. If price creates demand, creates support, which is against the trend, it's safer not to take the trade. Like here, we have demand, we have support created. The high of this big candle was taken out. Price went up a bit. That bit is not enough margin for us to have a good risk-reward ratio. Resistance was also created after a small rally here. We saw this pin showing that there are rejection. There is possibility of supply. There is supply meeting demand already, but there is a possibility of resistance being created, which was confirmed by this big candle. And the moment the low with a little margin was taken out, price came down. Now price found support at this point. Price found support. Price then rally, took out this high. As price has taken that high, now can we say we are flipping bullish again? So we just have to see that, okay, support's being created. We want the highs to be taken out. This high wasn't taken out until this, but after taking out, we have a big resistance candle. Then we have a big push down, trying to create support again. So in this kind of scenario, you just want to stay aside because you have seen a break of structure already. Supply was created, met, resistance was created, price it went down, but seems it stopped unted before going down. If you took this trade and you have your stop loss just a bit above this, you will be unted by this candle before going down a little. Now price is in a little crazy range, so you want to stay aside. So the point of this video is to show you that on the fly you can pick a lot of resistance and support level. You don't have to find like this point is resistance, this point is resistance, mark it, and then be waiting for price to come back here before you take another short sell. No. You can trade resistance zones as they get formed. You can trade support levels as they get formed. So that is the essence of this video. And looking at this point, we have this traditional resistance zone which was violated here. Then price came here. This candle showed that price is meeting supply, but this rejection also shows that demand are not ready to give up. Then at the end of the day, with this bearish candle, what happened? It seems the supply is going to win as resistance got created after the confirmation of this candle. It shows that resistance has been created, but this is a counter trend move because we have structural highs being taken out and a strong rally. Normally I would have expected price to come back to this area for me to take a trade, but after I found this this advanced support resistance analogy while studying the charts, I realized that sometimes price don't have to come all the way down. They just create support like it did here. See this big candle, it creates support, and then after creating support and the high of the support candle gets taken out, what happened? Price will just rally. And here when this resistance candle's low was taken out, price came down. But is this good enough risk reward for you to trade a counter trend move? Maybe not. It can be profitable if you are scalping, yes, but then look at this. And the good thing is, if support forms like this and you're taking a trade, if price is going to go down, the high of this candle will be respected, except price is trying to hunt. Now look at this. This shows that supply is coming to the market. This shows resistance was created. This formed support. If you see this support being formed, this is not a big move down for you to assume that the support has been formed. But if you say support has been formed here at this point and you want to take a trade, you will be taking the trade on break of this candle side. With a little margin. You don't just want to put it right on the high. You give a little margin. Then once it breaks, you take the trade. And look at it. Look at this scenario. The high was never taken out. So you won't be in that trade and you won't end up in a losing trade. But if you are taking the break of this low, as at this point, then you'll be in profit. But that is counter trade. Now, price is around, should I say, demand zone. We want to see support being formed. Now look at this. Support was formed right here with this candle tracer. But then look at something. If you want to take the trade, you will wait for the break of this high, right? The high wasn't broken, so no trade. And what happened? The next candle just created resistance. At this point, it created resistance. Then after that, you saw this candle showing that support is likely to be created. And then this candle confirmed that support. On break of this candle side, yes, you should go in the trade confluence with the price being on the demand zone, and your stops go below the low. But then what's happening is that price is trying to create resistance. We are seeing that supply is coming into the market with this doji. This pin bar is showing that bulls are not ready to give up, but it's bearish. Now we are having this big bearish candle. If this forms, then that means we have confirmed resistance at this point. But then, do you want to take a short trade? No, because price overall is still bullish considering this low. Considering this low. No, that's not it. Considering this low and this higher low. And then we are forming an higher low. So even apart from the higher lows, price is in a demand, right? Do you want to sell right on demand? No. So you just want to wait and see what happens. But this is creating a kind of range. We have support here, we have resistance here. So you want price to break and close above of this resistance, then for the high of the candle doing that to break for you to get long. That is confirmation entry. Or you want price to take out this total zone and then for you to flip bearish. So that is it about this little support and resistance lesson. Do not forget to subscribe. Even if you do not subscribe, these videos are getting shorter and shorter by the day. So thank you for watching, guys.